How does Finsposure's use of decentralized finance enhance accessibility, security, financial inclusion, and the growth of consumers' investment portfolios better than traditional investment and banking methods? Decentralized finance offers enhanced accessibility, cost efficiency, transparency, financial inclusion, security, and greater rewards compared to traditional banking. Pioneers in the decentralized finance industry have made an accessible alternative to traditional banking that has greater security and offers additional rewards to consumers. Current financial institutions have numerous drawbacks that are hurting consumers. Nearly 5% of U.S. households are unbanked, with nobody in the home having a checkings or savings account. There's a significant lack of transparency regarding fees, interest rates, and more, causing confusion to consumers. Financial institutions alone control and validate transactions, resulting in a lack of privacy and reduced security. Additionally, financial institutions offer extremely low interest rates that are far inferior compared to the large inflation rate. Decentralized finance allows any consumer with an internet connection to utilize superior services compared to traditional banking, including complete transparency, decentralized control, high interest rates that consumers can benefit from, mitigation of the US dollar inflation rate, and access to loans for minimal fees, regardless of credit score. Aave, Uniswap, and KeyDAO offer unique benefits to the DeFi space. Aave is the lead player within DeFi and boasts over $19 billion worth of deposited assets. Users are allowed to earn interest on their deposited tokens. Uniswap is an automated market maker and enables consumers to deposit liquidity. There is no intermediary between token transfers or on deposits, allowing for an autonomous interest-earning mechanism that is completely decentralized. KeyDAO allows for decentralized borrowing against assets, creating a unique collateralized debt position that allows consumers to borrow against their existing positions. Economist Carlo De Meyer claims that decentralized finance could be the end of traditional banking. Meyer continues by describing the benefits of peer-to-peer lending, borrowing including over-collateralized loans, and staking or yield farming, and how each of these avenues are advantageous for consumers. The enhanced security and increased accessibility of decentralized finance offer great benefits to consumers. Smart contracts are also an innovative feature that traditional banking cannot recreate. Ethereum's founder, Vitalik Buterin, describes smart contracts by writing, "Smart contracts are self-executing computer programs that automatically enforce and execute the terms of a contract between often unknown parties." Aave and Uniswap hold billions of dollars in locked liquidity and offer higher interest rates than traditional banking. Aave offers up to 4.2% interest on US dollar coin. Consumers can also stake assets other than US dollar tokens, potentially earning interest on a positive return asset. KeyDAO created a stablecoin that consumers can borrow from and earn interest from in their native token, Key. Aave, Uniswap, and KeyDAO offer consumers additional benefits compared to traditional banking. Traditional banking consists of minimal interest rates on US dollars, which is naturally a negatively performing asset due to inflation. Traditional banks also have hidden fees that greatly cost consumers in the long run. The US dollar inflation rate has been rapidly rising over the past few years, harming consumers' savings and investments. Decentralized finance is a solution to combating high inflation rates and low savings account earnings. DeFi offers significantly higher interest rates compared to traditional banking, while increasing accessibility. Finsposure is a unique decentralized lending platform that allows consumers to lever their investments by borrowing against their assets. Users deposit assets in Finsposure and can borrow up to 40% of their original deposit. Consumers receive US dollars and can further invest in their original investment or diversify their investment across several asset classes, including stocks, ETFs, or cryptocurrencies. KeyDAO rewarded consumers by both depositing liquidity and borrowing their stablecoin in the form of their token, Key. The stablecoin can earn interest through staking, or users could sell the stablecoin to buy volatile investments aside from Key and the stablecoin. The original deposit is locked until the stablecoin loan is repaid. The graph allows consumers to delegate or stake their tokens to an individual or organization called indexers. Indexers acquire tokens to index large amounts of Web3 data. Indexers earn rewards based on their own queries. Indexers set their own reward split, and all excess rewards are split between delegators proportionately to the amount of total tokens that delegators supplied. Key technologies include the Ethereum and Polygon blockchain, smart contracts, storage, and machine learning. This unique combination of technology allows Finsposure to offer a fantastic lending experience that aims to increase consumers' financial portfolio. Blockchain technology and smart contracts are built on trust, transparency, scalability, and security without the need for human intermediaries. Storage stores and encrypts all user data to guarantee security on the protocol, while machine learning is used to help consumers budget their investments and savings. Finsposure's technology architecture allows consumers to connect their Web3 wallets or Coinbase account to Finsposure's decentralized application. From there, storage secures the web hosting and either the Ethereum or Polygon network encrypts the user's data. Vault operators and vaults are connected to both Ethereum and Polygon through a bridge that connects the separate networks. Finally, Finsposure utilizes machine learning for a budgeting assistant. Finsposure uses a hybrid approach to the buy versus build scenario. Finsposure is able to innovate from existing Web3 lending applications by developing vaults and vault operators as a unique feature. Finsposure will cost between $50,000 and $75,000 to develop, and will have around $900 in recurring monthly costs. Finsposure is expected to take 18 months to be fully developed. Finsposure's roadmap includes smart contract development for the next 6 months. Then, the mobile application and website will be developed for the following 6 months. By 18 months, the vaults and vault operators will be available for consumers to use. 18 months and beyond, Finsposure will continuously develop new features while ensuring user security. Finsposure's mobile application will host the bulk of users. The application has a sleek and efficient design, with the sole focus being to benefit consumers. The application will be on both iOS and Android operating systems to ensure that every user has access to Finsposure. Vault operators are users that create vaults for other users to borrow from. Vaults are highly customizable, with the operator being able to change the deposit fee, loan ratio, default ratio, and which assets can be deposited. Vault operators being able to select specific assets is key to vaults being profitable for operators. From organizations selecting their desired currencies, they can collect deposit fees and the asset of their choice from default events occurring. This example shows what a vault looks like from the user's perspective. The user is able to see their total dollar value and asset, how much they deposited, how much they borrowed, the deposit fee, and the asset value where they are defaulted. Finsposure also creates a portfolio page where users are able to see their separate vaults and their total portfolio value. Case 1 highlights the benefits to users by showing a vault increasing at a rate of 10.26% based on the S&P 500's average annualized returns. In 10 years, the user would have earned an additional 55.6% on their original investment compared to just investing the initial deposit. Case 2 shows the effects of default events. This example is using Ethereum's return history from 2015 to 2018. The user did not invest the 40% US dollar value that was borrowed and successfully hedged their investment. In 2018, Ethereum had a negative 82.2% return, which defaulted the user. The user was able to keep 40% borrowed US dollars, which is greater than the value of the control investment. The vault operator also earns a fee from the default event. Case 2.1 shows the benefits to operators when default events occur. After the deposit fee and borrowing 0.06 Bitcoin, the user fully invested 0.21 Bitcoin. When the user was defaulted, the total amount of Bitcoin invested was given to the operator. The operator risked 0.06 Bitcoin in the loan, but received 0.148 Bitcoin after the default, for a return on investment of 137%. Since vault operators can choose which assets are in vaults, the operator is able to increase their holdings on their desired assets. Case 3 discloses the benefits and drawbacks for users and vault operators in different market conditions. Within bull markets, users receive 1.4 times their capital and pay limited fees. Operators are faced with high opportunity costs because they could have invested the loan capital and received larger gains than the default fee. There are also lengthy loan terms with limited default events occurring. Within bear markets, users can potentially receive 1.4 times negative returns and are at high risk of defaulting. Operators receive additional revenue due to more default events occurring, and their loan terms are shorter. Operators are also hedging their investments by earning deposit fees and default fees within a bear market. Ethereum is the best blockchain for Finsposure due to it being completely decentralized, extremely secure, and scalable outside of user transaction fees. Ethereum's drawback is high transaction costs, so Finsposure will offer a customized bridge that allows users to take their vaults to Polygon. Polygon is built on top of Ethereum, but is centralized. As a result, Polygon has extremely cost-efficient transaction fees. With the user being required to make at least 3 transactions from creating the vault, depositing the asset, and repaying the loan, the bridge to Polygon will save consumers capital and disregard Ethereum's only drawback, scalability. Storage decentrally stores data by separating the data into fragments called shards. Shards are operated by individuals across the globe that store shards on their own devices. Storage then encrypts the shards and stores the shards within their network. To use or open a file, a majority share of shards are required for the file to come together. Storage is completely decentralized and mitigates threats to Finsposure. Centralized servers bring additional risk, given that a single location stores both data and the product. Within a single centralized server, hackers only have to break through a single network to steal from or exploit the product. Storage decentrally stores shards across hundreds of users, making it extremely difficult for hackers to penetrate the network. Additionally, all of Storage's data is tied to the blockchain, requiring a hacker to either break into the majority share of independent users that are storing shards, or change the Merkle root structure to manipulate the blockchain. Finsposure will use storage as their web host for their website, application, and decentralized application. Finsposure is most vulnerable through smart contracts. The specific smart contracts that Finsposure uses holds each user's vault, and the deposits can be withdrawn through hacking the smart contract. If a hacker was to break into the smart contracts, they can potentially drain users' wallets by manipulating the connection Finsposure has to each user's cryptocurrency wallet. Finsposure is also vulnerable through the website and mobile applications, which can be hacked and rebounded to a duplicate version of Finsposure that drains consumers' wallets. This is known as a man-in-the-middle attack. Zengo was able to find that majority of cryptocurrency security breaches occur because hackers exploit a design issue in how cryptocurrency wallets ask their users to approve of certain transactions, such as creating a vault. Finsposure will negate cybersecurity risks by undergoing numerous third-party audits for the smart contracts, website, and mobile applications, while also integrating an anti-malware with intrusion detection and ensuring user and developer anonymity to avoid from exploitation. Finsposure will also encourage white hat hackers to find bugs within the protocol. Bounties will be rewarded to white hats that submit a bug. Immunify is the leading bug bounty platform for Web3 and has already rewarded more than 162 million in bounties for reported bugs. Finsposure will create bug bounties on Immunify. Finsposure will adhere to regulations by allowing vault operators to include their consumers in mandatory Know Your Customer, KYC, and anti-money laundering, AML practices. For example, Coinbase's vault may require consumers to have submitted KYC information by sending their driver's license, and Coinbase will use their AML algorithm to determine if a consumer is appropriately paying taxes and following Coinbase's guidelines. Finsposure adheres to the General Data Protection Regulation and CCPA by not storing information, because it's directed towards vault operators such as Coinbase or Robinhood. ZK snarks are used to hide specific transaction information within vaults. ZK snarks ensure that all transaction details remain confidential while being verifiable to the user through their own cryptographic hash. Elliptic curve digital signature algorithm is used to ensure that transactions are signed by the owner of the private key without revealing the private key itself. CAC 256 is a data hash algorithm on Ethereum that is used for creating unique wallet addresses and to ensure data integrity on the blockchain. Finsposure will use Scrum as an agile project management framework due to the 2 to 4 week sprints that divide the project into smaller sections. The product backlog portion of Scrum will be vital to Finsposure in order to ensure that vault creation, borrowing, fee management, and cybersecurity is being developed properly. Overall, Finsposure sprints will follow the schedule: sprint planning, sprint execution, sprint review, sprint reflection, release and deployment, acquiring feedback, and then we'll proceed with the next sprint. Security checkpoints will occur halfway through each sprint to ensure that the project is remaining protected from a cybersecurity perspective. Risk assessments will occur after each sprint is completed. Additionally, after a feature is completed, closed consumers will be allowed to test the protocol and give feedback for a better user experience, and so they can share security violations. An additional risk assessment will be completed after 3 sprints have concluded to ensure that new features do not violate the security of the previous sprints. Ethereum is a volatile cryptocurrency asset that is associated with extremely large returns in major tracebacks. In 2017, Ethereum had a 9,380% return, and followed that with a negative 82.2% return in 2018. Both 2018 and 2022 had such negative returns that every vault is guaranteed to default. Finsposure aims to achieve 500 unique vaults within the first 6 months, 5,000 vaults within 18 months, 25,000 vaults within 36 months, and having 50,000 vaults long term. Initially, Finsposure will offer vaults on testnets with no monetary value, with incentives for consumers who use vaults on mainnet. Mainnet users who participate in the testnet will have reduced fees and access to new vaults immediately. Additionally, user feedback will be prioritized for future feature rollouts. A 4% default rate is added due to the likelihood of a crash due to cryptocurrency's historical volatility. 4% was chosen as a conservative estimate to show that certain years' default rates will be much greater than other years. Over the past 10 years on Ethereum returns, 2 years would have been guaranteed defaults from losses exceeding 50% or more. The profit and loss is highly dependent on the default rate and the deposit fee that the vault operator selected. Finsposure's growth phase will introduce variable vaults that allow vault operators to control the deposit fee, specify assets included in the vault, default ratios, and minimum or maximum deposits. Marketing campaigns will be released to achieve 5,000 unique vaults. As Finsposure continues to grow, the expectation of the average vault value will increase as more organizations join the protocol. As more users use the protocol, and the average vault amount increases, Finsposure and vault operators will earn more revenue. The long-term phase will be focused on research and development to introduce new vault types and assets into Finsposure. Revenue will be spent on additional marketing campaigns to continue Finsposure's growth. As more users start to take advantage of Finsposure services, more wealthy users will realize how valuable Finsposure is and can greatly increase the average vault amount. Ethereum has significant transaction fees when an abundance of users are attempting to complete a transaction at the same time. To solve this, Finsposure will ensure that a bridge is immediately available to Polygon network for users to either create or transfer vaults to Polygon in order to achieve cheaper fees. As Finsposure continues to grow in total value locked, hackers will start to target the decentralized application more. To protect Finsposure, countless third-party audits must be completed to guarantee user protection. Additionally, as Finsposure continues to grow, competitors will start to offer cheaper fees for a similar service. It is crucial that Finsposure creates meaningful partnerships with corporations that can create Finsposure's longevity. Finally, as regulations continue to evolve within the Web3 industry, Finsposure must ensure that they are following the most up-to-date regulations. Instead of traditional cross-selling, Finsposure aims to prioritize the user experience by not forcing users to pay additional fees and payments towards a good service. To compensate for potential lost income, Finsposure will accept advertisements in the form of organizations and corporations paying Finsposure for a prioritized vault spot. This will ensure that their vault, and in turn their specified asset, has priority on the total list of vaults. This advertising format increases Finsposure's revenue without users paying for additional services. Due to the advertisements having priority placement on vaults, organizations can attempt to inflate the price of their selected asset by influencing users to borrow against their holdings to purchase the selected asset. On the other hand, nefarious developers can rug pull their asset and force users to be defaulted, making the vault operator extremely profitable at the user's expense. To negate this from happening, advertisers must have a minimum required capital available to loan, and the asset must have a minimum market capitalization of 100 million, with the top 5 holders having less than 20% of the available supply. Users with 1,000 or more in vaults have access to a free machine learning budgeting model. The financial assistant will automatically allocate suggested savings and investments per month based on the user's income and expenses. The free financial assistant can only create negative results if the user reports false claims on their income and expenses. The user is held liable to their losses through Finsposure's terms of service. Valuable users that have 1,000 or more in vaults are also given access to vault groups, which are liquidity pair token vaults. These vaults combine two assets in a 50-50 ratio, such as $50 in Ethereum and $50 in Bitcoin. If Ethereum starts to go down, the pair will automatically sell Bitcoin to purchase more Ethereum to keep the 50-50 split. A drawback to liquidity pairs is that if a single token fails, the other asset will have a minuscule value due to continuously purchasing the failed asset. On the other hand, liquidity pairs can be a great way to diversify portfolios if the user expects both assets to increase in value. Users with liquidity pair vaults earn transaction fees based on the total volume traded between the two assets, which increases their holdings further. Finsposure will introduce a maximum number of vaults a single user can use. If a user exceeds 5 vaults, an additional 1% fee on deposits will be introduced for every vault after. Users can use a different wallet address to restart the vault count, however this introduces multiple logins and passwords. For the ease of use, consumers can pay the premium fee and keep all of their vaults within a single wallet address. Finsposure will collect consumers' transactions to determine which assets and time zones are most popular. Additionally, Finsposure can collect the frequency of transactions to determine the average vault length, how many consumers are making several deposits, or the percent of consumers who are focused on repaying the loan. Finsposure must focus on time zones due to the decentralized nature of the blockchain. By focusing on time zones, Finsposure is able to locate prime geographic locations for advertising and marketing purposes. With the data that Finsposure collects, Finsposure can offer large vault operators such as Coinbase additional insights into which type of vaults would be most profitable and popular by region. Additionally, Finsposure can utilize the data collected to determine which assets are most profitable and which assets are not netting the protocol significant revenue. Finsposure can also create trends for how vaults perform within specific regions and how vaults hold given bear and bull market situations. Finally, Finsposure can use the collected data to create predictive analytics. For example, if Bitcoin rapidly rises, large corporations should increase their deposit fee due to the anticipation of large users coming to use the platform. Predictive analytics are also useful to determine user behavior and which regions are most likely to default or close a vault profitably. The main risks of Finsposure are smart contract breaches, regulatory changes, incorrect analytical insights, and technological failures. Finsposure can mitigate each of these risks by performing audits and guaranteeing encryption, ensuring compliance with both blockchains and governments to guarantee that Finsposure's access is not limited, making sure that all analytical insights are correct, and verifying that Finsposure is automated and is correctly calculating vault metrics. Failsafes are intended to isolate and shut down a specific vault in case of exploitations happening. An example would be 10% or more of a deposited asset within a specific vault being removed within one transaction from a single wallet when several wallets deposited assets into the vault. Additionally, Finsposure will have the general public license due to it being open sourced, and any derivatives of the protocol must be open sourced. Finally, Finsposure will also use role-based access control to limit developmental access to specific individuals, with the founding wallet being the only individual with access to modify smart contracts. Finsposure creates an ethical decision-making framework by focusing on sustainability, societal impact, and blockchain benefits. Finsposure accomplishes this by choosing key blockchains for reduced energy consumption, changing proof mechanisms to greatly reduce emissions created from Finsposure, granting access to all consumers regardless of banking or credit status, ensuring transparency, data privacy, and fairness for every consumer. Finsposure will track the environmental impact of each transaction and will donate 1% of revenue towards offsetting the carbon footprint created by Finsposure. Finsposure's emissions can be tracked by multiplying the kilowatts of energy consumed per transaction by the carbon intensity and by the total amount of transactions. If Finsposure is carbon negative after the 1% donation, Finsposure will donate additional revenue until it has a net neutral carbon footprint. Finsposure will also donate 1% of revenue towards Web3 developmental grants in hopes of future developers innovating within the DeFi space. Gitcoin creates grants for new development teams within Web3 and is the organization that Finsposure will donate to. Finsposure will encourage consumers to offset their own personal carbon footprint while gaining trust in the market as an ethical protocol that prioritizes environmental and business longevity. Finsposure will create newsletters that include consumers, employees, and stakeholders within a quarterly key performance indicator, or KPI update, in how Finsposure is benefiting the community through Gitcoin grants and fighting against climate change. The KPI newsletter will be publicly posted across all social medias and through email subscribers.